Well, hello everybody and welcome to our Calgary market update for February. We've got a lot to get through today, so let's jump right into it. So first up, what is the deal with the tariffs? We were going to have tariffs placed on us. Now it looks like they're on pause for a month. Are we going to see them again? Nobody really knows, and I'm not sure if even Donald Trump knows what's going to happen here. But a lot of people were asking the questions about what this might mean for Calgary real estate. So tariffs could be considered a macroeconomic effect, which means they affect everything in the country, really. So Calgary would be affected in much the same way as most of the other major centers across the country. With a few notable exceptions, we are less sensitive to the auto industry and raw materials, which does impact the Eastern Canadians a little bit more than it does us, and that the energy industry tariffs were only going to be set at 10%, not 25%. So I don't think it's going to be a dramatic effect, even if it does come into play. I got another slide or two here that I'll show you about this in a minute. But there is going to be uncertainty, and if there's uncertainty, it can make some buyers a little bit nervous about entering the market, particularly if they're in one of these industries that could be affected. And so we may see a few fewer sales just as a result of that. And new construction costs could go up as appliances and ceramics and steel and hardware and things like that. We do import those from the States, so if those become more expensive for home builders, then they're going to pass those costs on to home buyers. So new construction costs could come up a little bit, but the Explorers and Producers Association of Canada, so this is a trade industry or trade association for the energy industry, is saying, yeah, 10% is bad, it's not great, but they can live with it, and so investors can live with that as well. I think to take note of here as it pertains to the energy industry is that they make their revenue in US dollars, right? So when they're selling oil in the States, they're getting their revenue in US dollars for that. And so generally speaking, the tariffs are anticipated to lower the Canadian dollar and increase the American dollar. So revenues are going to be coming in American dollars, and their costs are going to be in Canadian dollars. So they can make up that 10% loss on the difference in the exchange rate, so to speak. Okay, so the oil industry, energy industry, they're going to be okay. One more slide here, just with respect to tariffs. So the municipal leaders are saying, hey, you know what? We're beefing up our border here. We hope this appeases Trump. This is what got Mexico off the hook. And then later Trudeau had a phone call with Trump and said, yeah, okay, look, we're flying some Black Hawk helicopters around and all of that. We're going to beef up our border, get some drones down in there. And then the tariffs were put on pause until I guess Trump has something else he wants to ask us for. Interestingly enough, I think they are actually catching people at the border with these helicopters, but it's people trying to get in to Canada from the US, not the other way around. Anyway, so an interesting story that we'll be following here. But there is going to have this uncertainty over the economy, and maybe, just maybe, we could find a little bit of national unity rather than this fractured, political dynamic that we've had here for the last, better part of a decade. It sure would be nice if we could rally around this challenge and broaden our trading partner base across, some other nations and not be so highly reliant on the U.S. Wouldn't it be great if we could see some pipelines built and some trade barriers removed across the provinces? Who knows? But one can wish anyways. A little bit on the green line here. This should probably be a bigger story than it is, but the provincial government, Danielle Smith, coming in and saying, hey, look, we're going to fix this for you guys, Calgary, because you can't solve this problem yourselves. We're going to pull our money. That's what she's saying. We're not going to give you our share of the funding if you don't accept this alignment. And so they've looked at it. They've said, here's the alignment. It's going all the way down to Shepherd, the South Health Campus now. There's going to be no tunnel through the downtown. We're looking at an elevated track along 10th Avenue, and the train's not going to go to Eau Claire. Okay, so this was approved by council. It's moving ahead. They're supposed to start construction here this year, so it should be getting a bit more airplay, but I think people are just so tired of talking about the green line and all the stops and starts and everything, so I guess we'll believe it when we see it. Some other news, CREB, Calgary Real Estate Board, had its annual forecast where the economists there will put forth what they think consumers can expect from the real estate market in Calgary, and generally speaking, they're calling for another good year. In fact, a nearly identical year in 2025 compared to what we had in 2024. So sales are going to be a little bit higher compared to long term. I think the post-pandemic years are kind of their own, set of years to kind of be looked at. I don't think you can look prior to that and compare them. Just too much stuff is happening then. But anyways, the sales are expected to be a little bit above the long-term trends, but nearly identical to last year. So if you come over here and look, here's the forecasted year for this year. The sales in total are almost expected to be exactly the same, with average pricing coming down a little bit from that, high 7s, 8% range from 2024 to around 3% is what's being forecast for 2025. Okay, nothing wrong with that at all. Alberta GTB from GDP, from ATB Economics is expected to be at about 2.5%. That's great numbers in there for our GDP growth. Nothing wrong with that. Interest rates are expected to come down this year significantly. Actually, we did have an interest rate drop from the Bank of Canada just a few days ago, and we're expected to see a few more of those as we head into the fall. So if you're shopping for a mortgage this year, you have to be looking at the variable rate, especially when we're seeing rates with an expectation to head downwards. It would be smart to look at a variable rate. I even think if you got a variable rate now and wanted to lock in at a fixed rate at the end of this rate cycle, that would be a good way to go about it. But for now, I think you should consider a variable rate loan. In terms of employment numbers, employment is still going to grow this year, but at 2.3%, not the 4.4% that we had last year. That's still very healthy numbers, right in line with the GDP growth, so that's okay. Unemployment is creeping up a little bit to 7.8 from 7.6. Now, you might think that could be an indication that the economy is not robust enough to employ more people. But the reason why our unemployment numbers are higher is that we're getting a lot of migration into Alberta and into Calgary from both international sources and domestic sources, interprovincial sources, before these people even have jobs. So they're just coming here because it's so much more affordable and the cost of living is less, that they're coming here and then searching for employment. So I don't think you can read into this unemployment rate around 8% and think that it's a sign that our economy isn't too good. I just think that we're so much more affordable than other centers in Canada. Here's a slide I really like that shows the employment forecast by industry, and nowhere on this list is anything in oil and gas or energy. Okay, so back in 2015, when we had our economic downturn that coincided with the Liberal government getting in at that time. That then really triggered a lot of question marks about the Calgary economy, in that we were too highly reliant on our strong oil and gas sector, and that we needed to diversify ourselves. Well, I think when you look at this now 10 years later, this is a really good sign for our local economy, that the top employment growth sectors, none of them have anything related to energy. So good work out there, business owners in Calgary, for making that happen. Population growth expected to come up 3.1%, down from 5.6 from last year, which is not sustainable. 3% is much more in line, closer to that 2.5% that Calgary has traditionally observed. So this is just fine. It's going to feel like a very normal year. And again, almost 100,000 people expected to come to the province from out of the country, and lots coming from all sorts of different areas across across Canada as well. So another very similar year to what we had before. Okay, so let's jump into January's market statistics so we can see if the very first month of the year is following along with what the forecast from the Calgary Real Estate Board is expecting. So in December, the average price $583,000. In January, $583,000 again. Okay, if you look at the sales, so from last month to this month, sales have come up a little bit, but we're down 12% for sales in January compared to this time last year. And that's an important theme for the next few minutes, so I'll take you through here. Okay, new listings is also much different. So we're looking at December's, we were around the same, but this now in January, we've got way more listings now than we had last year. Okay, a lot more inventory coming to market. 35.5% is a big change compared to January of 2024. All right, looking in here at the months of supply metric, so 2.5 months worth of supply, that's considered a balanced market. We have been hovering around balanced market conditions since last fall. Okay, a very even market, and this is why we're not expecting to see see huge high single-digit growth this year. It's going to be low single-digit growth in Calgary because we're going to be in a bit more of a balanced market conditions. Okay, now this is just an overall generalization of the market. I'm going to talk to you about some specific price points and some specific asset classes where it's going to be a bit different. But more or less, we're going to be in balanced market conditions to start the year here. So when we look at the pricing picture here, you can see this blue line here is the pricing, where basically from the middle of last summer, because we came out so hot to start 2024, we kind of peaked right around that June-July timeframe, and then prices gave up ground for the rest of the year, and only just now does it seem like we've leveled out. Okay, so we're starting this year at a level 583. Last year we were at a level 570-ish or so. So now we're starting to come up and sales are starting to come up, but we're not seeing this huge explosion out of the gate with pricing and sales like we saw last year. So something to be mindful of there. If you're expecting another strong start, we may not see it. Okay, and here's some other numbers to really kind of drive this home. As if you look here at the number or the amount of inventory, the year-over-year change in inventory. So not just new listings, but the amount of listings that we carried over from the end of last year. We are up by 68%. Okay, so there's a lot of inventory and supply there to meet all of this demand that could be coming from, a good economy and lower interest rates and things like that. So I just don't see us launching out of the starting blocks quite the same way that we did last year. I think it's going to be a lot more even-handed out there. So if you've been trying to get into the market in the last few years, but found that to be a little bit challenging, a little too competitive, this could be a good year for you to consider jumping back into things. Looking at the overall asset classes now, so again, 2.5 months worth is considered a balanced market in terms of month of supply. The apartment condo segment is solidly in buyer's market territory at 3.5 months worth 3.5 months worth of supply, when all the other ones are just a little bit into the seller's market territory under 2.5. Okay, and you can see here the various parts of the city are going to feel really tight. If you're looking for a detached house, it's still seller's market territory out there. But if you're in a row house or if you're looking for an apartment, might be a little bit easier depending on the community that you're trying to get into. Price points is another one, depending on your budget and where you're looking to spend. If you're under the $300,000 or under $400,000 range, this is where most of the condos are going to be, so that's kind of clouded a little bit. But as you can see here, most of the other segments of pricing are coming in right at around under 2 seller's market territory. If you're in that detached segment between 500 and 700, you're going to find that to be quite competitive. And then even up in the upper detached range, just under $1 million, still going to feel balanced or maybe just a tinge over on the seller's market. But if you're spending more than $1 million in Calgary, it's a buyer's market out there for you right now with lots of available inventory in that space. So a really interesting start to the year. I think it's going to be a lot of fun to be in Calgary real estate this year. Not as stressful as it was in years past, and a lot of stuff going on. An election is going to be looming here in Canada. We've just had one in the States. All of this stuff is going to be affecting the market, and I can't wait to take you through it for the rest of the year. So thanks very much for watching, guys. I hope you've had a great start to your year, and we'll see you guys next video.